expectations of the GST. Now getting a little distant, but logistics company Gati has been, been on the market's radar and lately has lost 46% in 2014. Dhruv Agarwal, the Vice President of Gati, joins us now. Dhruv, good morning. Thanks a lot for joining us. There are a lot of discussions going on about how GST would benefit logistics companies. Can you put a number to how much incremental benefit your top line could see if it indeed comes by at some point and a year or two later?
So GST is definitely a plus for the industry as a whole, and especially for the logistics sector. I think we would certainly see a benefit of at least somewhere in the range of 8 to 12% is what we estimate now.
Okay, so 8 to 12%, but with the GST situation now looking quite grim, at least as far as this winter session is concerned, will there be an operational glitch that you'll face?
See, with the scenario being, as in a as-is kind of scenario, it would be business as usual. It would not, it would not hamper growth the way it is going now. Neither would it, give an impetus. It's going to continue as is. The first half of this year has been subdued in line with what is happening with the Indian economy. Though of course we all saw a slight uptick in the in the Diwali festival season, especially for our e-commerce logistics vertical. But I think moving forward, this year, FY 15-16, would not be a marquee year in terms of growth.
Yeah, actually, when you say business as usual, the usual has not been very good for you. In the first half of FY 16, actually, your top line has been flat. How does the second half look? And therefore, the entire 2016, FY 2016?
FY16, we are looking, H2, the second half of the year is slightly better for us in terms historically as well. And we're looking to probably close somewhere closer to a 5 to 6% growth over last year. But having said that, it also depends that, now we still have another festival season for the e-commerce sector coming up in the month of December. So it will be hard to peg a right number, but probably at the end of December we would be able to have a better view of how we will close 2016.
Okay, you've constantly been adding capacities as well. Can you just give us a lowdown on that? What's the current capacity and what capacity utilization are you guys working with right now?
So currently we are handling close to 7 million packages a month, which includes our B2B business, our B2C business, and our fulfillment centers. And a large part of this year we have spent in creating better capacities in the areas where we are seeing a greater demand. Over the peak season, we had an excellent capacity utilization of 80% plus during those 6 weeks or so. Now it has tapered down a little bit. And I think if you look at the year overall, we would probably close at something like a 70 to 75% capacity utilization of our vehicles on road.
Okay. Well, with constant capacity addition and a flat top line growth, the margins have clearly come under pressure. What's the FY16 margin outlook, and when may margins improve?
FY16, like I said, we still have 4 more months to go, and it will be tough to give a fair estimate of where we will close. Probably in our investor call at the end of this quarter, we will have a better estimate. But in 16-17 is where we see that we will be really able to utilize the capacities that we've built on the ground, looking at the pipeline we have, looking at some of the newer services we are rolling out for our e-commerce logistics vertical. 16-17, we should see a healthy double-digit growth in our top line, and we should see a substantial growth in our bottom line as well.
Okay, that's good to hear. Dhruv, you keep talking about e-commerce being a massive growth driver. What's the current contribution to your business from e-commerce?
E-com over the last 4 years as a vertical has grown at 100% plus year on year, and over time it has consistently been taking a larger share of our overall top line. Currently, it's at about 8 to 10% of our overall top line, and e-commerce logistics typically has a slightly better margin of about 15 to 16% at an EBITDA level.
Okay. Actually, your competitor, Blue Dart, has shown double-digit top-line growth and even better bottom-line growth in the first half of FY16. So, are you losing market share?
Gati is an express package company which is primarily focused on the surface section. Of course, we have a very wide air network, and also we are India's largest parcel train operator. I'm not, I've seen Blue Dart's numbers growing, but they are primarily in the smaller packages and in the courier segment, which is kind of, so we are not really an apple-to-apple comparison in terms of the kind of packages we carry. Just to give you an idea, probably the number of packages that a Blue Dart might carry will certainly be much larger than what a Gati carries, but if you compare the weight that we carry, that's where the real comparison would come in terms of how much tonnage we have carried and how much tonnage they have carried, or the growth in the tonnage would give a more apple-to-apple picture. I'm not privy to, of course, Blue Dart's numbers, so I can't comment. But we are in slightly different segments.
I take your point on that. Thank you very much, Dhruv, for joining us after a long gap, as it were, and glad to hear that you expect the second half to be better and FY17 even better.